Eric, this is exciting. 10 years into our journey starting this rating agency, and we win the Structured Finance Rating Agency of the Year. Maybe just to put it in context for people, if you could talk a little bit about what it was like in the early days, 2010, 2011, when we just started out.
Yeah, well, everyone's excited about the award here, and some of it is going back to the early days, which were quite exhilarating, because at that time we had a small group of individuals with a singular purpose of building a better agency, and trying to do that by leveraging their years, if not decades of experience of hearing feedback and ways that agencies could serve the market better. So we spent a considerable amount of time in the beginning actually trying to validate how to be a better agency and better serve investors. And in doing so, a lot of the feedback that we got, regardless of asset class, it came down to the basics. And it was producing clear, easy to follow methodologies that were grounded in data, and being mindful of always being timely with reports, whether that was with the new issue report being out shortly after deal announce, when investors can best use it, or having a timely reaction and putting data forth for surveillance. And we brought that to the very first methodologies we produced, which were the CMBS property evaluation methodology and single borrower methodology. And we were fortunate in that our continued engagement with market constituents, people really wanted to see what we could do.
Well, it's interesting you mentioned investors. To me, one of the most rewarding aspects of what we've done is the relationships that we've built with investors, particularly on the structured side. Talk a little bit about building that investor base that now so heavily relies on our work.
Well, I think that one of the most important things that we have always tried to do is not just listen to investors, but consider ways that we could act on their feedback, because we believe that we're not alone and isolated in an ivory tower, and that those dialogues really do help us create the most well-informed credit ratings we can, that encapsulate all the credit risks that might be inherent in a transaction.
It's funny because I think that was one of the biggest breakdowns of the financial crisis, was the interruption of that feedback loop, sort of not hearing what was going on in the market and then adapting. And I think one of the things that is that I'm proudest of, and I know you are as well, is how we adapt. And I think COVID is a really great example. Maybe talk a little bit about the research and outreach that we did during COVID.
Well, I think that one of the things that has always been core to our principles here is using surveillance as a feedback loop and mechanism into a new issue rating process. And I do think that times of economic dislocation are when the market counts most on credit rating agencies to step it up. And we tried to very much take that opportunity to take fulsome views of our analysis that were data-driven and not overreactionary, and put forth research pieces to the market, and in our surveillance reports, even when there was no rating action, convey information that was of use to investors in making their ongoing decisions.
And, I think that you hit on a good point there, that I think it's this steady hand, this sort of evaluating, getting the work out there, being transparent during a period when there was a lot of volatility in the market. I think investors appreciated that sort of calm, steady reliance on knowing that they would get that information from KBRA that information was going to be transparent. It was going to be fulsome.
Well, I think that it comes back to being data-driven, and I'll call or recategorize what you
And not
said.
overreacting, which I think you pointed out.
And not overreacting, but it's taking a pragmatic, practical approach in considering what rating actions, if any, to take. And it's one of the things that we learned most about what came out of the crisis, and frankly, other events over the time of the capital markets with credit rating agencies, and not being overreactionary or pro-cyclical, but at the same time, taking action when needed.
You know, not to get too broad here, but I know that you hear in different aspects of our life that expertise is sort of under attack. Talk a little bit about how important expertise is to our business and how important it is, how experience really matters, and why we really attracted the people that we attracted.
Well, I think speaking for structured finance, our senior leadership team, it's comprised of 8 individuals that have decades of experience, half of which were with us from the beginning, and all of which continually strive to consider market developments and continue to build a better rating agency and a better construct. But I think there's a couple of things with our management team and the way it thinks in terms of continual improvement, having and instilling intellectual curiosity in our staff that has led us to not just be active in all of the structured finance segments, meaning, ABS consumer and CMBS and MBS and CLOs, as well as commercial ABS, but it's also made us continue to seek challenge and be in areas, if you look through our timeline, that are quite different, nuanced, and even, I'd call it disparate corners of SF, whether that was SFR in the beginning, commercial NPLs, mortgage servicing rights, or even reverse mortgages.
That's a really good point. And even taking a little bit further, I think our agency taking a different view on community and regional banks and really being the first agency to rate those banks, now rating the largest number of community and regional banks and seeing the other agencies follow what we're doing, I think is very rewarding. We'd certainly like to see them wait a little while before they followed us, but I think seeing them follow what we're doing, I think speaks volumes about the thought leadership that our leadership team has shown. I think that one of the areas that is the most interesting to me is the feedback we got early on in CMBS and what it led us to do. And maybe talk a little bit about that, because I think that speaks volumes about how we interact with investors and how important and critical we think their feedback is to what we do.
Well, I think that comes back to trying to act on feedback. And from our marketplace interactions, we could point to many reports we may have produced or portions of pre-sales that we produced that were influenced by external feedback. But in the case that you're bringing up, early out, we had investors see our new issue rating reports or CMBS, and they had asked for color and commentary, not necessarily ratings, on legacy CMBS, which at the time there was still quite a bit of, and there's still some now. And what that led to is the creation of our subscription surveillance service for CMBS, where for a wide variety of market constituents in that space, we started a unit that solely focuses on providing analysis, commentary, and valuations for now it's up to over 1,000 deals a month, whether we rate them or not, that has gotten great traction in the market. And not only that, it has also assisted us in using it and leveraging it in our rating monitoring effort. Effectively, we use that as a service unto ourselves. But it also formulated the beginnings of our KBRA Analytics LLC unit.
Which is really interesting. And now we've expanded that into financial institutions where we do have data and analytics on every U.S. financial institution and a number of non-bank banks and credit unions. And we also have our Altman product, which is a product that we've teamed up with Ed Altman on looking at the default risk in corporates. And we have a database that goes back to the 70s that I think is just now, we're beginning to see a number of investors be really interested in that information and some of the analytics that we have around it. I think the last thing that I wanted to talk about while I've got you here is ESG. I think for the firm, ESG we're making a huge commitment in the ESG space. We're doing something very different than our competitors. We're incorporating ESG into analytics as well as into the rating process where it fits, and then also encouraging clients to have more disclosure around ESG factors that may not be impactful today, but may have an impact down the road. Maybe talk a little bit about what the structured finance area is doing around ESG and how important you see ESG being in what we're doing in structured finance going forward.
Well, I think ESG is an important part of not just what KBRA is doing with structured finance, but in the broader structured finance capital markets. One of the things that we did last year in 2020 was for each and every one of our pre-sales and new issue transaction reports, we added an ESG section that covers the basis for the particular credit in both a generic and a specific sense about environmental, social, and governance factors that may impact the particular transaction of the asset class. But the other thing that we've also been doing in structured is we've been active in working with both CREFC and SFA on industry-wide efforts to promulgate better transparency and data around ESG that we hope to better leverage in our rating process. And in doing so, we've also had dialogue with a number of market constituents about what research they would like to see. And that actually led to a fairly innovative piece on auto emissions that we put out a couple of months ago that we're actually in the process of updating.
You know, it's interesting. I think this is a great note to close on. Talking about transparency and how important transparency is going to be going forward, thinking about ESG factors. But, you know, we're sort of a thought leader when it comes to transparency, because when you look at our early research and our early deal analysis, we really were the first firm that were completely transparent about how we reached our rating conclusions. And I think we were early in realizing that the research and the analytics was as important as the rating, that investors were very much interested in this transparency. And so it's interesting to see how that now has become sort of an important watchword when it comes to ESG and companies being more transparent and about the information they provide to investors.
I would say that even beyond the topic of ESG, when I think back to all the years that I've been in the credit rating agency business, I guess what I'm most proud of is that in many ways, I think our entrant in our first pre-sale that we published just over 10 years ago in structured finance, I do believe that it did raise the bar on timeliness and transparency. And if I look back at rating agency product pre-KBRA and post-KBRA, I think it's an example where I could say competition actually worked because we raised the bar for the industry. And we're hoping to continue those efforts as we move forward, including ESG.
That's great. Well, listen, thanks for spending time. It's great to catch up. Really congratulate you and the team. Winning this award, Rating Agency of the Year, is, I'm biased. I think we deserve it, but it's really great to see that sort of industry recognition and seeing other stakeholders, believe in our work and to recognize the job that we've done over the last year. So thanks, Eric. Thanks for spending time.